Hey everyone, this is Jacqui Cooper and I am with CryptoMom. And for those that might not know about CryptoMom, it's a podcast to journey my learning about the cryptocurrency world and the various businesses and individuals who are making a difference and exploring various areas in the blockchain area. And today I have an expert in the field. I'm going to have him introduce himself because he's doing so many different things. He's breaking barriers in so many different areas in science, technology, and blockchain. Thank you so much, Alastair, for being here. How are you doing?
No, great to be here, Jacqui. So my name's Alastair Caithness. I'm the CEO of Ziyen Energy. We're an energy company that is a startup, but we've known about 5 years now. So we're sort of moving out of startup mode, I suppose. But we've seen our way through COVID and we're coming out the other side. So that's a good thing. I think anybody who's still in business after COVID, they've done a good job to get there, you know.
I
So
agree.
it's been a tough year and a bit, I think, for everybody. But what we are developing on the blockchain is that we are tokenizing energy assets and providing liquidity into those energy assets. So that's really just our area of focus. So our journey was we were a startup oil and energy company. We acquired oil assets or interests in oil assets in the Midwest and Texas and Louisiana. But the problem that what we're trying to solve, so if you think of the blockchain and cryptocurrency, it's all designed to solve a problem. So what's the problem we're trying to solve? So if you think of oil producing assets in the Midwest or across America, the structure usually is there's the operator will own, say, 50%. The landowner, which is quite often the farmer, he'll own, say, anywhere between 12.5 to 25%, depending on which state it is. So you've got to have a good relation with the landowner. And then another 25% or 30% is owned by, and they call them non-operated working interest holders. So these are people who've invested into this project. So you might put in, say, $50,000 and you own 1% or 2% of this project. And then what happens is, as it starts to produce oil, every quarter, depending on what percentage you've got, you're going to get distributions. So obviously there's tax benefits for people coming into this. This is why, you know, they always say there's tax breaks in the oil industry, but there is tax breaks for people to invest in oil production in America. So you've got this asset that you might own 1-2% of that, you know, barring all problems, is going to produce oil for 20 years. So essentially for 20 years, you'll be getting a check based on the oil price, the oil production, what's actually happening with your particular oil wells. The problem is that from a non-operated point of view, if you want to sell this working interest, it's actually quite difficult. So what does that mean? It means like the money's locked into the life cycle of the project. So you've invested in an asset and this asset's giving you distributions, but essentially the money's locked in. Now, if you're the operator and you own most of the project, yeah, you can sell the project on and everyone else who's got working interest usually gets sold or get a return at that point. But if you're from the non-operated point of view and you've got your 1-2%, you really have no say in what's going on. You're just there for the ride and there to get the distributions. So what we're doing is on the blockchain is we're trying to unlock the liquidity. So people have got their money locked into the project for the life cycle of the project. By us tokenizing this, so rather than actually having the capital structure broke down by percentages, we make it into its own token or coin, and we're calling them tokens because they're security tokens. We can speak a bit about the difference between that and cryptocurrency in a second, but back to the problem we're solving. So essentially what it is rather than owning 1-2%, you might own 20,000 oil token one. So what this system and platform that we've developed is, rather than, and it won't change the way it works, it's still, you'll still produce oil, still get distributions, but you'll own a token and a coin that's going to give you distributions. But if you ever want to sell this working interest, now there's a platform for you to sell it under tokens or under coins. So this is where when people talk about unlocking the liquidity, they're doing it in real estate projects as well. You know, big real estate projects right now, it's like your house. You buy into your house as an asset. You know, when you sell it as one piece. You know, you think a bit like this. If this is an oil project, now it's all just broken into tokens. Now there's going to be a two-way exchange, and they're called alternative trading systems. And everything we are doing is through the SEC security tokens. So this is the difference between tokens that are regulated and through government control and cryptocurrencies, which are essentially anonymous out with government control. And these new security tokens will be going through a transfer agent, just the same way as you're doing it with shares. And that's why a lot of people call them digital securities. But really what's happening is we're changing the capital structures. And that's what tokenization allows you to do. But if you start to think about that, by us making this one change, it actually changes everything. Because suddenly the capital structure of all energy producing assets in 10 years from now will probably be in this model. Because it's just easier to sell it, even between big operators, even if they didn't want to go out to an open market space. But for the type of oil projects we're looking to develop, that's what we started on. And then obviously when COVID came along, we were going to do all about drilling and oil and gas. And then the oil price went to minus $37 a barrel. Essentially, all the production got locked in. There was over 250 Chapter 11s filed in America with small to medium-sized domestic energy companies just because of COVID. That's a huge effect when you think about, these are companies that some of them have been going for 30 years. They just couldn't handle the production being shut in. So it made us have to pivot our business model. So we can't just do oil and gas. So then we started to look at renewable energy and other energy sources. So what we realized is with renewable energy, it's even more difficult to invest in renewable energy. Like you and I, we don't own part of a wind farm. It's like governments own it, big operators own it, pension funds, they own part of a wind farm, big investment groups. But essentially, the man, woman, person in the street, they don't have an opportunity to invest into this. But through tokenization, so what we've done is we've created a platform where we can tokenize any energy assets. So what we're doing there is we actually acquired a lease for a wind farm up in Wyoming for 35 years. And from there, we're going to tokenize part of this wind farm once it starts to go into operation. And we'll allow people out there, just like regular Joes, if you want to say Joe Biden, regular Joes, this opportunity to come in and invest in an energy project. And that's all through tokenization. So even though everyone seems to be, this terminology, you're getting to grips with the whole thing, but really what you're thinking about is the blockchain and tokenization is going to change capital structures. And the terminology that's quite a good way to describe it is democratization of ownership. So up until now, only the uber wealthy can afford to do this. In the next 3 years, all of us will be able to invest in energy assets. And, you start looking at renewable energy, once we've got this set up, what will happen is people will be able to buy into a wind token or a solar token. We're already speaking to one wind energy developer now who's interested in doing a token. And then what he'll do is he'll actually tokenize part of his wind farm. You'll be able to buy in and own some of these wind tokens. And every quarter, as it's producing electricity, you'll be given a check. Now, this check can be in the form of any fiat currency, so US dollars, euros, etc. But it also can come in the form of cryptocurrency, using like a company like Coinbase as the escrow agent to a certain extent. So the crypto comes through them, and it's in Ethereum, and it's also in Bitcoin. So what's going to happen is people will be able to own part of this wind token, and as it produces electricity, you could actually get more Bitcoin and more Ethereum, depending on how your wallet's set up. And, this is all happening in the next 18 months to 3 years.
I'm very excited about everything. As you were talking, different questions were popping in my mind, and then you started to answer certain questions. You started off with the oil and gas, and my first question in my head was, what about the renewable? And then you started talking about that. For those that might not know, I'm going to ask you some of these questions because back in June when I started, and I still am learning, but there were certain things that I had basic questions on. So I love the idea, and to me, it just blows my mind how technology is working these days. Blockchain to me is, it's to me, the way I describe it to someone, it sort of is like Legos. You have different connecting pieces. And what makes it very transparent, even though there is privacy, is that each of these Legos, and correct me if I'm wrong, is sort of a smart contract because it's an agreement between the next Lego and the next Lego. Am I sort of right in thinking that?
Yeah. Mm-hmm.
So what you were talking about from the tokenization idea, And I understand why you made the distinction between the securities and the coin, because there's also discussion going on now in Congress, because there's so many different definitions going on. Your tokenization to me sounds just like stocks in some ways, where you can invest in a token, just like you would invest in a stock, and then you get a return. So for someone who's not familiar with the terminology, am I explaining it?
Yeah. Then I would say, yeah, you think of them like they're called like asset-backed tokens.
Yes.
So the SEC are calling them security tokens, but really they're asset-backed. Now they're either asset-backed against the company or the equity of the company,
Yes.
or alternatively, they're actually asset-backed against an asset. You
Yes.
know, so when we're tokenizing that. So, but you're right. That's a lot of people should think about them like digital securities. So people are now
Yes.
starting to use the word digital securities, because essentially the stock market's trading, you know, at a certain period of the day, and these are shares. What this is, through all these wallets and everything else, is just digitizing the whole thing and fractionalizing it.
Yes,
you know,
exactly.
so it's there. And then what the SEC's done that's different is, because these transfer agents are getting set up, so the companies who are becoming transfer agents, so we're going to work with a company, Securitize, who builds these tokens, and they've got their own transfer agent, but their transfer agent also deals with digital securities. So they've actually a digital securities transfer agent. They acquired a transfer agent in order to do this. So they're already regulated by SEC. So the difference is, if you've got a Bitcoin or cryptocurrency wallet, you know, you own this wallet and it's sort of anonymous.
Yes.
Anybody who owns these Ethereum wallets to trade these new security tokens, the transfer agent's going to know your wallet address. So the difference is, if you lost your wallet, you'll have to go through a KYC, etc., in order to basically get set up this wallet, so they know it's you. So they've got you in the system. So the minute you acquire any of these security tokens, they'll know. So if you lose your wallet, it doesn't matter. Because, well, it does matter, but it doesn't really matter, because what you would do is you would go back to the transfer agent. Yeah, I've lost my wallet. What they'll do is they'll verify it's you, because you've already given your passport or driver's license in order to basically do the acquisition. Just in the same way you have to do that with any shares, etc. Open like a Fidelity account, same sort of concept. And then basically what they'll do is they burn those tokens and then reissue you new tokens into your new wallet. So it's a bit like, if you lost your Fidelity account, doesn't mean you've lost all your shares inside, you know?
Exactly.
So the way they're doing it, and this is the way whereby, you know, when I was talking about, we were, you know, before we came online, you know, I did a podcast out in Nigeria, but in Nigeria, cryptocurrency is illegal.
I know.
Yeah, but then it's not illegal is what we're doing through security tokens, because they know this is regulated and it's through government control, you know?
Yeah. So again, for those that might be listening, there's two different types of assets that we're talking about. There's the digital asset that is used as currency, and then there's a digital asset that is backed by an asset. Exactly. And they can both be within an ecosystem, because they can be used for different things. But one of the coins that I'm associated with, and I know a little bit about, is Bitcoin, but that's a digital currency asset that's connected to an ecosystem that's different, even though they have just created the ability to buy real estate with Bitcoin. So that's why I'm learning, but I'm really interested in your energy side. I'm also interested in learning more about, I know Nigeria, I saw your post about that. How many other countries, you might not know, and that's okay, but how many other countries have laws which make it illegal for the currency side, but have it legal for the energy asset side, like what you're doing, your tokenization?
Yeah, well, so Russia it's illegal to have cryptocurrency there. There's a lot of countries, there's quite a few through Asia. I think India's sort of, they have Bitcoin there, but it's supposed to be illegal there as well. So the problem with a lot of these countries is they don't like them using it because they can't tax it.
Right.
You know, so the thing is, like, America's sort of developed a system. So, you know, for you to buy Bitcoin out here, it'll be through Coinbase or some sort of account here. So there's certain tokens and security, you know, that are out there that they're for sale everywhere except the US and Canada, because
Yeah.
it's not gone through there. So you'll think, oh, I want to buy this, and you come in. So even places like Binance that people know of, your Binance account here is different from a Binance account out with US and Canada, because there's certain things you can't buy with it, and they wouldn't let you actually have an account here unless they made these jurisdictional changes, you know. So America's more regulated to do it because I think they're on the cusp of doing this. So the reason why, you know, at the end of the day, I think it's because of what I'm doing in the energy space, but it's really because of these security tokens that other countries are really becoming interested in this, and they're, you know, adopting laws to do this, is because, you know, this technology, the blockchain's here, you know, it's going to change everything. So they don't want to stop their involvement in this new technology. It's like the start of the internet all over again. So you don't want to watch the development. They found this way through these digital securities and security tokens as a way for them to utilize the technology. And there's going to be millions of use cases. You know, you were talking about use case of Bitcoin. I'm talking about one thing of tokenizing energy assets. I think the people home got to realize that once they start to, it's not about the development of this technology, it's how you're going to utilize it, you know, the utilization of this technology. And there's going to be millions of use cases out there as people get their head around what it can actually do, you know, and it's just, it's amazing from that perspective.
I don't mean to interrupt you, but how did you get involved in this? I mean, your background is so diverse. How did you get involved?
It was really it was because we set the company up as the Reg A company. You know, as I worked out in the UK, and I worked for a guy, Mike Knox, that did oil and gas projects with cable and wire. He was my old boss, and he got me he trained me in the energy industry anyway. So I worked for him for just 7 years. And then I worked for a company for like 3 years that did government tenders, etc. So I know a lot of it, public procurement. It's always pretty funny because Americans are always, they'll go, you know, I worked seconded to the British government, and they all go 007, and I go, no, public procurement. They go, oh, that sounds pretty boring. Yeah, it's the most boring thing in the world. But unless you're in it, it's actually really interesting, you know? So it's like, you know, so just watch how government spends money. But basically, so when I came here, we set the company up doing information and contracts to go into these market spaces. And then we started to acquire interest in contracts. And it was really just going out to the Midwest and acquiring all these interests that we started to develop the concept. And it really, and we were looking at a way to speed up the transition in energy. So in terms of how can we produce oil, basically with, you know, a greener footprint than what we're required right now. So, you know, what people don't realize that, you know, once you've actually struck oil and land drilling in America, you know, one of your biggest costs is electricity to power the pump jack that goes up and down. So, you know, we were working in concepts to essentially use renewable energy infrastructure like solar farms and, you know, little wind farms connected to these things to generate the electricity. So therefore, the electricity you're using to power the pump jack is actually green energy. And in a way, it was going to drop the price of the oil to do that. And from that concept, I was invited to this well services event in Houston. So I did a presentation on that. And that was the first time I met guys from Shell and BP, you know, in terms of I was presenting next to these guys, and it was a conference. And it was really from there, I was introduced to one of the guys named Karn Subith from Shell. He came and started speaking about this concept. And, you know, just saying, well, I've got a company that wants to speed up the transition in energy. And he said, you know, and I'd seen the blockchain, knew about Bitcoin, and then he had a conversation with me from there. And then we started looking at it's like any startup, you start suddenly see the opportunity, and we've now, by moving into this field, and then obviously you're sitting with all these big operators, and they're talking about this technology to you and how they want to apply it. And really at that point there, we started to really get involved in it and just started looking about oil blockchain, speaking about it. You know, it was a company called Data Gumbo that started doing all the smart contracts, watched them, and really just started looking at this way of maybe developing an oil coin or an oil cryptocurrency. And that's where we came up with the ZiyenCoin. And it was an idea of, you know, for the transaction side of things, you know, there's $200 billion a year in transaction fees in the oil industry. So a lot of people don't realize that as all these coins that become transparent there, if they can reduce the time to transfer money from A to B and, you know, reduce the friction and reduce the cost just from all these transactional fees, you can actually save a lot of money. And that's why a lot of people started developing the coin. But really at that point, we started looking at the model, and, you know, there's other people in the past that come up with these concepts. The biggest problem was you couldn't get adoption from the major operators. So unless the major operators did this. So when I went to an oil blockchain event, I spoke about that. Again, Karan Sudi spoke to me afterwards. He goes, no one's ever going to, we're not all going to use ZiyenCoin. It's just like, because there's no need for us to do it. And, we'd rather use a shell coin if we're going to do it, a shell token. And they're all thinking that, like Gazprom. So we started looking at it from a different angle. And it's like any sort of business model. You start looking at, well, if we can unlock the liquidity, what's the problem with the way it's operating in the Midwest? And we started talking about the tokenization piece and started understanding the liquidity and the technology from there. People started speaking about it, and it's not really been done yet. But the difference is when I went back and spoke at the next time the blockchain event, I said, yeah, we're going to make a platform whereby rather than try and get mass adoption from all the operators, if we can just create tokens and coins on behalf of other operators to do this concept and create a platform, we don't need mass adoption, and we can solve the problem from the bottom up. Right. And if we get 200-300 operators using this, and it really just started to spin the whole thing round. So you were thinking top-down approach, but really we started bottom-up approach. And we've acquired quite a few interests in ZiyenCoin. We own interests in oil wells. We actually bought into 42 producing oil wells in Texas in our token. So we're buying up the dust and stuff like that as well. So it's actually in operation, believe it right now. It actually owns interests in lots of projects, and then this wind farm and the wind lease we acquired, and then other areas. And then by doing that model, when I did the presentation again and spoke to them, and like suddenly, Shell and all these other guys, they like this concept. So what are you doing? You're going to make me my own token that I own, and you're just essentially going to be a service provider to do this. Yeah, you're maybe onto something now, because this is now their thinking, and then they're starting to understand the business model, and then they're suddenly thinking, because you've taken away the biggest problem, all of them agreeing to do it, mass market adoption, and then making them use a brand name that they might not like, where suddenly you make them where it's like Shell token 1, Shell token 2. And then the way I envisage, these guys will end up making lots of tokens for all their different projects, or they'll do a pool of assets, or it depends on how they want to structure it. They won't just have one thing. And really that's what we started to do. And, the platform we've got ready now is, we can share with your readers our business plan and pitch deck and what we're doing, an overview of the problem we're trying to solve. And, and that's what we did. So you sort of, at first, it seemed like it was going to be so easy to do this top-down approach, but as you got into the weeds, it becomes nearly impossible at this stage. I think at points going forward, they will. Like there's talk of Gazprom, the big Russian gas company, wanting to make their own sort of cryptocurrency token. But again, it's illegal out there. They want to make a regulated one, and they want to basically sell all their gas to Europe using this. Now, they could potentially do that because they produce so much gas. But if you're a small player, you can't dictate what these guys do. And one of the bigger companies says, if it works, we'll try you. And if it works, then we'll buy you.
I guess for those that might not know how this works, you had talked before about Coinbase and other platforms. So if someone is interested in actually taking a dive and exploring obtaining a token that you're creating, is it available now, or when would it be available, and how would someone actually acquire that, especially if they want to support the solar, the wind, and some of the other, whatever their passion might be.
Right. Okay. So these are called ERC20 tokens. So the wallet that's got over 2 million users is called a MetaMask wallet.
Yep.
So people can set up a MetaMask wallet, and then this is the best. There's probably the best. The reason why I say it's a good one.
I have a MetaMask wallet. So if I have a MetaMask wallet, then what do I do?
Yeah, so you can just, at the moment, we've got it where you can just acquire them directly from our website.
Got it.
We'd fill a subscription agreement, then we burn the tokens and we send them to you. And going forward through the platform, what we're doing is different is we'll have it where you can upload your wallet into the platform as well. So your MetaMask wallet will be held on the platform, and then you can hold so it'll be more like a site you can log into, but you'll also have these securities on your phone, but they'll also be mirrored into the platform, and you'll be able to buy them directly from there as well. The thing that obviously what we're waiting to happen is, and this is across the the entire industry in terms of these ATSs, the alternative trading systems, is once they go live, that's when people will be able to sell the token. Now, it depends on how the token's structured. And, you know, because right now these security tokens are under mostly Reg D 506C, which is the, you know, traditional regulation, you know, if anyone's bought shares, or Reg S if they're from abroad. And, you know, traditionally it's a 12-month holding period. Now, obviously everyone says, well, it's going to get faster than that. But, you know, at the moment it's 12 months. And there's no ATSs, you know, there's T0, but they really only do their own token. And then there was Open Finance that did 7-8 tokens that are there as well. But what you'll find is that companies like Securitize and North Capital, they'll be launching their alternative trading systems this year. So they're all supposed to be coming out at the, you know, either Q2, Q3. They've all got the licenses, they're ready to go. So at this moment in time, suddenly this will come through. And if anyone, you know, people might know of a company like North Capital, they do all the credit investor checks, they're a broker dealer as well. Investment bank, Securitize, broker dealer within their Securitize markets. So, you know, if people go in and start researching these companies, they should read about them as well, because these are the companies that are going to be involved in developing the ATSs, but they'll be the ones looking after your tokens. So right now, what you'll find with the security tokens is people can invest and hold them, but the back end liquidity is not quite there yet in terms of being able to sell them. But once that's operational, you'll be able to sell these tokens. And then what they're talking about is the time period, once it's all under one roof, it'll be down to 90 days. And then they're talking about 30 days. But if you think of what we're talking about, like investing in an oil asset, whereby you're holding this for 20 years, if suddenly after a 90-day period, you now can sell this, or a renewable energy interest, you know, you'll be able to sell these things, that in itself's a massive time difference come in, you know. It's not going to change how it works. It just gives this option of liquidity. And then most people are going to invest in these things and hold on to them to see what they do. You know, that's really is. The difference from this sort of ZiyenCoin, Ziyen Energy token that's different from everyone else's is we actually own a piece of every other token. So the way we are structuring it is we've got the platform, we're the biggest owner in the platform, obviously got other partners. And as every token comes on, Ziyen Energy token, ZiyenCoin will take a little piece of each token. So we'll grow that way there as well. So we are finalizing the talk of building a gold token right now for someone who's got a gold mine. And it's for the same thing. They've got a gold mine that's probably worth about $200 million worth of gold. And they're actually just processing the gold now, and they're actually making the gold coming out. But they're creating a token to tokenize part of the gold mines. And what they'll do is every quarter, as they produce gold and you've got some tokens, the options will be interesting. You'll be able to US dollars, euros, Ethereum, Bitcoin, or even gold. What they want to do is, depending on how big a chunk you've got, if it's over a certain size, they can FedEx you some gold. So what's actually happening there is people with Bitcoin will be able to invest directly into this gold mine in a gold token and through it to a token. And as it produces gold, you can either get that gold that's produced either in gold, or you can get it back in distributions in Bitcoin. It can come straight back into your Bitcoin wallet, you know. So,
understood.
So all these things are about to happen. And yeah, once people get the hang of it, it's a bit like anything. It's a bit like Starbucks app. I always say to people, you know, 15 years ago, if you said to anybody, oh, by the way, there'd be this massive coffee shop that, you know, when you went in there, you would just type into your phone what you want. You would go in, you wouldn't give them money, you scan it, and you just scan it, and it'd already be sitting at the end of the counter, and you didn't have to speak to them. People thought you were making this stuff up, you know?
Yeah, or even like you know, our credit cards. I mean, when you know, in the 60s or whenever, they, you know, again, the idea that you would not have cash in your wallet, you would just have this plastic that you would then had, you know, credit back to your bank. Everything is transitioning to more digital, and it's definitely mainstream. It's just like you said, you're solving a problem. It's it's a way for us to wrap our minds around how is this working, because technology changes so fast and it's able to solve so many problems, but sometimes we're stuck at the other mode and we need to move forward.
Yeah, it's just a transitional time that people should just start to understand that something
Yep.
coming on, and then what people talk about is it's a bit like the start of the internet. You know, internet started from email back in the 90s. If you thought about the internet now, it's got like a million different use cases or billions of different use cases, and there's new ones coming up all the time. This blockchain's the same thing. You know, we've just been talking about one thing.
Yes,
You know,
exactly.
I don't really know much about your Bitcoin, but they'll have done it to solve a problem, and then you want part of this problem that's getting solved. But as people start to wrap their head around the technology, the good thing about it is it's, you know, the courses into these right now, you know, Harvard, MIT, they're doing like 6-week, 8-week courses, and LinkedIn, they do courses as well. And, you know, you don't have to spend a lot. The reason they can't do a 4-year degree in it, because they don't have information yet. You know, it's like
Well,
it's
and
that
it
new.
changes so fast. So what,
Yeah.
I mean, you know, it's like my background's law, even though I'm not currently practicing, but I know that blockchain cryptocurrency law did not exist when I went to law school. It just wasn't there. Contract law, yes. This is just a new form of contract law. It's smart contracts, you know, and finance law, yes, you know, so there's twists and
Yeah.
turns and everything.
Oh, yeah. And I think for a lot of people, you're already using like 70% of the world's shipping is already tracked in a blockchain. You know, so it's like, and you're probably using a blockchain with so many devices right now, you don't even realize that type thing. You're just trying to understand the terminology. But I think, you know, what smart contracts will do that will affect most people first is, you know, they talk about within 10 years, and it might even be faster, invoices won't exist, because it'll all be these smart contracts, as you talk about the Lego. And so what will happen is, before you go into some sort of deal with somebody or whatever else it is, you'll do it all through a smart contract. So it's all front loaded. So if you think about you getting goods delivered to your warehouse, you know, in the past, you would get the goods, or on an oil industry project, you would get the, you know, the goods on site. And then as it arrived, normally you might have to pay some upfront if it's a lot, but normally you get a 30 days, 90-day period in order to pay the invoice. And you get an invoice out, you wait 30 days, you know, you've got back end people to chase this, and there's a whole people involved in this. With a smart contract, the minute the goods are, it's all agreed up front. So the minute the goods are delivered, the smart contract is executed and you're automatically paid. So when they talk about the big energy operators, and when I first started going to the events, you know, you're talking about guys like Saudi Aramco and Shell thinking they can save anywhere between 8 to 11% of fixed costs. So if you're thinking this is your back end administration, but if you turn over $500 billion, you know, you're 8% of your fixed cost, you know, is a lot of money.
It's a
So
lot of money.
they're talking about saving this. So what? And there'll be loads of lawyers now thinking, wait a minute, am I out of a job? No, it's actually going to be better for you guys, because you're going to have to basically, you know, get involved in these smart contracts up front. The difference really being is, if you're a person that chases invoice, you know, debt collector, you know, collections department type people, that, you know, in a number of years from now, that job will go. It's like somebody working in the supermarket that used to scan all your items. And before, they used to have to type them all in, you know, and knew all the prices. Now you're just, if you can get this scan yourself, you'll do it because you think it's faster. You
Yeah.
know, you just don't, and it's just like that. It's just the person who's chasing invoices, you know, the credit control department, they won't exist. 10 years from now, credit control won't exist. Invoices won't exist. And people think that's so weird, but it'll just be easier, and it'll just be that administration process is gone. But if you take that administration process out, you know, how many billions of dollars is that going to save, you know? So suddenly it's bottom line. But then there's all the jobs in the front end of people now negotiating these smart contracts, because you don't want to get them wrong. Because if you get them wrong, you know, it's like you've got to agree the deal that's already been agreed, you know. So it creates it, and then that creates this new industry, you know. So we get rid of this one, we create the new industry, but overall, because these things are so intuitive, it's going to be easier and easier for people to negotiate these types of contracts without parts of the legal team, because a lot of these parts will be put in there as well. So, you know, it's the same way everybody sort of deals with suppliers and things like that, but it'll change again.
I really, really appreciate your being on the podcast today. Everyone who's listening, trust me, there'll be continuing conversations as you know, everything is developed. We're going to have updates, so that way everyone can get involved with enjoying access to the token and learning more about energy on the blockchain. Any last minute thoughts that you would like to share before we sign off?
Yeah, so our white paper on the process of tokenization was actually written with researchers and professors from University of Florida, Michigan, and Columbia. So if any of your listeners or viewers want to get a copy of the white paper, just send us the email. We can send that to you, because it's quite good, because essentially they've written about us and we're the case study in the paper. And, I'm one of the authors of the paper as well. But it's good because it's a way, it's 17 pages long. If anyone's interested, it's a sort of university professor's take on what it is. So it makes it easier, I think, for people to understand, because they sort of write about the whole thing, so it's good. So if anybody wants a copy of the white paper, just let us know.
For sure. I'll definitely make sure that the contact information is in the blog post below, as well as on my YouTube. And I know that I'll probably be doing a blog, and that way that link will be there as well. So that way everyone will be able to stay current, because this is a fascinating field, and I appreciate your time. Thank you so much for being on.
No, thank you, Jacqui. Pleasure.